Hey guys, this is Eric with Low VA Rates talking again about forbearance. That's the hot topic right now. This is video 2 of a 3-part series. If you haven't watched video 1, please go find it and stick around and please watch video 3 after this. Right now I want to talk about the pros and cons of mortgage forbearance. Let's see, in no particular order. The pros, number 1, it's going to help you get through this hardship. This coronavirus, COVID-19, is no joke. It's wreaking havoc on many families and many households. It gives you time to get financially back on your feet if you have lost your job or your income's been reduced, perhaps through a furlough or some sort of temporary unemployment. Other pros about this: you will avoid late fees and penalties. The CARES Act, which I talked about in video 1, actually forbids lenders from adding additional late fees and penalties. Once you're in that forbearance agreement, they cannot do that. Matter of fact, it won't hurt your credit either. The law does not allow the lender or the servicer, whoever you're making your payments to report you late during the portion of time in which you have an agreed forbearance period. Probably the biggest benefit, the biggest pro is it's going to help you avoid foreclosure. Normally, if you go 3, 4, 5, 6 months without making a mortgage payment, you're not going to be sitting in a pretty situation. Right now, under these extreme circumstances, you can avoid foreclosure by taking advantage of forbearance. Now let's talk about the not so pretty side of forbearance. This is the part the media is not talking about. This is the part that unfortunately people are ignorant on. I really want you to pay attention because there are some cons that come, and I'm not talking con man or anything like this. There's just a downside. There's some risks in doing forbearance. Probably the biggest downside is it does not erase what you owe. This is not interest forgiveness. It's not just being wiped out. As a matter of fact, just for easy math, let's say you have $1,000 a month mortgage payment and you go a full 6 months in mortgage forbearance. Okay, that's $6,000 that once your forbearance period's up, you're back to work and the world's becoming normal again, you very well may owe in one lump sum $6,000 because the law has not indicated how these mortgage lenders are supposed to help you exit forbearance. That's, at this point in time, still left up to the determination and the interpretation of your lender. So just imagine nothing's disappearing. There will be a big lump sum. If you have to go further, you may be $12,000 behind, if you will, on your mortgage payment. You're not technically behind, but you have to make up that money. The other way a lender may have you pay it is they may chunk that $12,000 down into $1,000 increments, and for the next 12 months, you owe your normal mortgage payment of $1,000. So you may have another $2,000 mortgage payment every single month for the next year after coming out of this mortgage forbearance period. Now also remember, we talked about the lesser of two evils. Number 1, if you can afford partial mortgage deferment, where you continue to make partial mortgage payments, that's better than just not making any of your mortgage payment while in forbearance. But even in a partial payment situation, let's say that $1,000 mortgage payment I'm talking to you about, you make $500 a month. Okay, well at the end of your 6 months, you're $3,000 in the hole. Or if you go a full year, you're $6,000. The same principles apply. You're either going to be hit with a big payment due all at once for the total amount, or you're going to stretch that out over a certain period of time. Now, the last thing that lenders might do, and you're going to have to discuss this with your servicer, is they have been given the ability to just extend the total life of your loan. So they may say, okay, you're out of forbearance. Let's get back to making that $1,000 mortgage payment. For the last 6 to 12 months you haven't paid us, we're going to extend your 30-year loan by an additional 6 months or by an additional 12 months. Now, that doesn't just mean that's going to happen or that money goes away. When you go to refinance your house or sell your house, that's all going to be tacked on to the back end of your loan. So keep in mind, the biggest takeaway here is when you're in forbearance, the money's not just being washed away. You're going to have to pay the piper at some point. That's why if you can make your payments now, you absolutely should. Okay, there's 2 more downsides or risks to forbearance, guys, that I want you to understand. Number 1, the law hasn't even mentioned this yet, so I don't know what's going to happen, but imagine if you're not making your mortgage payments, there are taxes and insurance that are part of your escrow account every single month. So I've been talking about this $1,000 mortgage payment. Well, let's just say $200 of that payment is supposed to be going toward your taxes and your insurance. Nobody knows what's going to happen right now with that money, but your taxes are due in some states twice a year, 4 times a year, some states once a year, but taxes have to be paid. And nobody has suggested at this point in time that we're just going to push out or ignore real estate taxes. Not to mention, you're still in your house. You have to keep insurance premiums paid. If you're not making that mortgage payment, who's going to pay your insurance premium? So there are still some uncertainties. And anytime there's uncertainties, that in my book is a risk. So keep that in mind. I also want you to understand that there is a much broader impact from mortgage forbearance that could make its way down through a trickle-down effect into the overall economy. Now, that's not your personal responsibility. It's just something to consider. Again, if let's just say a third of the country goes into a forbearance program, because we might have 30% unemployment if things don't get better soon. Okay? Well, if you've got savings, if you've got other income to make your payments, you need to, because imagine the state of the housing market and the mortgage market if 1/3 of all homeowners decides to go into some sort of mortgage forbearance program. It could have a lot of unintended consequences. I'm hoping it doesn't, but keep that in mind. Now let's talk about for veterans specifically. And keep in mind, even if you're an FHA borrower or a conventional borrower, there are similar opportunities, but for veterans specifically, here are some options that I think you should absolutely consider prior to going in and applying for forbearance, which we're going to tell you exactly how to do in video 3, so keep watching. So here's what you should consider doing. Number 1, you've heard us talk many, many times about the VA Streamline program. What a great opportunity to lower your interest rate and lower your payment during economic hardship. Keep in mind something I've failed to mention. If you're in forbearance, your interest rate's not getting lowered, okay? Your payment's not getting lowered. As a matter of fact, you may be creating a situation where you're not even eligible to take advantage of these low interest rates that the Fed has been giving us, because if you are in a forbearance program, you cannot streamline. So before you do that, if the noose is getting a little tight and you're feeling a little restricted, please call us and talk to us about a streamline. There is no reason to not look at a streamline first. You're going to get up to 2 months off of your mortgage payments with a streamline. It's possible to get a refund of your taxes and insurance money that's sitting in your escrow account. That is cash to you in a situation where right now all of us need some extra cash. Not to mention, once your new payments are due, lower interest rate, lower payment. To me, this is the very first thing every veteran and pretty much every homeowner should be looking at. Can you still refinance? Of course, if things have gotten so bad that you've lost your job, that might not be an option, but call us and let's look. There are opportunities that you should look at first. Okay, so if low VA rates can't help you with a streamline, and you still want to try something else before you call your lender or your servicer and try to get into a forbearance program, there's something called the Hardest Hit Fund. Okay, in the box below this video, look for the link. We're going to post more information about the Hardest Hit Fund. There's also every single state, sometimes each county within the state, have special programs to assist you in making mortgage payments during times of hardship. So look there first before going to your servicer for the full-blown mortgage forbearance. Keep watching and please look at video 3, which is coming up next.